As we start the new year off and we get volatility back into the markets, let's take a quick look at Forex Trendy and some of the patterns that have shown up in the last little while. So the first trade I want to look at is a rising wedge on the Euro New Zealand dollar. And this took place on the 5th. And let's just take a look what we got. So as you can see, it was a sell signal, a break at 68.43 back on the 5th. And as you can see, this thing has dropped quite a substantial amount. This would be a great trade, and I hope some of you that are part of Forex Trendy got into this trade. And as you know, you do get alerts sent to your phone. So this trade, let's take a look at some targets here. The first target, well, we got down to 65.89. So you're pretty much just above the third target here. So hopefully some of you guys got into this trade. Some of you people, not just guys, got into this trade. 68.43 and down to 64. So that's a great trade. Let's take a look at, that was actually the rising wedge. And we also had a triangle set up. Let's take a look at that. Triangle, these, you see they have different setups here. That's interesting, huh? So there are a couple of different points you could have got into a trade here. This is at 68.32, so it's a little bit of a different pattern, but still, there's plenty of opportunity to get in that trade. This is a United States dollar against the Japanese yen 4-hour chart, rising wedge, sell signal, break. Let's take a look. This happened just before the holiday began. Let's see what happens here. So we're looking at, what day was that? The 29th. So that's over in this area here. We did get a breakdown. We got stalled, price retraced back up into this, and then collapsed from there as well. Now, this is where you have to know how you're setting your stops on these trades. There's many ways you can do it. Anyone that's just putting their stops just in these areas here because they have a small account and they need a bigger position, if you're just putting your stops just above these areas here, that is a mistake. You do not want to do that. You have to allow for some fluctuations in the market. You know, the natural ebb and flow of a market. When you get a big, strong move down, you have to expect that you're going to get some mean reversion taking place. And that's what happened here. And then we got another drop down to the downside. Pound US, 4 hours, a flag. It was a buy signal at 13.44. Again, just before the holiday. This is actually really great because what we got here is a push-up consolidation. When you get a consolidation at highs, I'm a big fan of those, especially when it's just underneath resistance. Huge fan of those kind of trades. And this one went 36.10. So you actually got almost to the second target. So you got from 34.44, another big trade. You can do the math on that. Euro pound. A flag sell at 88.67 on the 27th, which is in this area here. This is a very sloppy trade, and I wouldn't blame a lot of traders for having to stop up in this area here and getting stopped out. Like I said before earlier, you don't want, when these break down, or any it doesn't matter how you're trading, you don't want your stop just above highs or just below lows like this. That is a huge mistake, because what's happening on shorts, for example, if you put your stop above here, you get this pops above, you're actually getting taken out in an area where you'd want to be getting a position, which means like this. You've all heard of stop hunts, right? Market goes up, so you want to short this market. You start to short, a little bit of a pop up, and then this happens, right? You get a candle to the downside. This is standard operating procedure of the market. These are trade entries, not exits, okay? So just be very careful with your stops. New Zealand dollar, Japanese yen on a daily chart, falling wedge buy signal. It fell and then retraced back in. Losing trade, right? Again, where's your stop? And this trade probably looks good to you, right? You got this big, strong thrusting movement out. And those aren't bad. But as a trader, you want to monitor what happens after the breakouts, okay? That's huge. You want to monitor, because when we see a breakout, to the downside or the upside, we don't want to see momentum in the pullback. There's momentum in this pullback. All right, so if you start to see that, it doesn't matter if your stop's way down here. When you get momentum, strong momentum against a breakout, you don't want to stick around. Okay, that's interesting. We had two falling wedges, same difference here. Not many people I know trade this. It's one of those exotics. Canadian dollar against the Swissy. Let's take a look. And this trade was a where we go buy signal at 77.94 on just before Christmas. So just around here. I can't see because the it's cut off down here where we are. But and this is not bad. When you get these little pokes and price comes back, people think that when a breakout happens that if price pulls back inside, get out. Not necessarily. All right. If you think about, how the market gets out, what do you need for the market to move forward? You need buyers, or you need what? Sellers exiting a position. Okay. You also see here, and this is a problem that you want to keep in mind when you're looking at these kind of trades. See this rapid rise from the low of the range. When you get the market just zooming out and breaking out from the low of the range, expect this to happen as opposed to not expecting it to happen. This is strength, yes. But remember, breakouts are a different beast. There's a lot of volatility around breakouts. There's a lot of different thoughts. There's buyers and there's sellers. Okay, so these are volatile areas. So just be very careful when you see these kind of moves. This trade eventually does work out. Aussie Swiss. Where are we here? A buy signal at 76.16 just before Christmas again. So in this area here, I'm not sure this doesn't make any sense, right? It's hard to see when it's like this. But we can see the price has gone to 76.97. Not a big trade, right? But it is what it is. Weekly charts. Weekly chart patterns, when they break, can be insane trades. This is a buy signal. It didn't really do much. Strong move against you. You don't want to see it like that. Okay. Pound Aussie. It's a break at, where are we here? 69.07. It does break out nicely. It gets to 79.42. That's not a bad trade. It didn't hit the targets. But targets are, we're on a weekly chart here. So if you are trading weekly charts, you're going to suffer through some pullbacks as you go for the bigger moves, obviously. And you accept that as a trader, right? If you're a longer term trader, you expect to see this kind of stuff. This is a sell signal, 70.16. Again, it broke down, right? These are fine. These are legitimate chart patterns. It broke down, pulled back to 72. So this would have been a tough trade to be standing against. And still holding, especially when you see it break down like this, consolidate, and then a low momentum move to the downside again. That's tough to take. And I'm sure if you did short at this and you saw this, you probably got out with a little bit of profit in this area here as price started to retrace back. And let's take a look at one more. Falling wedge. It's a buy signal. It's still in effect, and it's gone up as high as 118, right? Actually, this is back in July. Whoa, let's take a look where that is. July 01. Oh, it's in here. So you'd still be this. This would have been a tough trade to sit against, right? You probably would have been out a long time ago. So weekly charts, a little bit different. But you can see from our 4 hours and our daily charts, quite successful trades. And I think, again, this is something that I do not understand why traders don't trade price patterns more often. It's silly. You should. And you can see what I have my settings at. You can actually take the weekly off. And I'll be honest with you, I don't trade off of weekly charts myself. Daily, generally. I use 4 hours for entries on my patterns. But daily's in 4 hours. And some of you guys want to trade the hourly chart. And that's entirely up to you. And this is your alerts. I don't need alerts because I have my chart set up. But again, something for you to look at. And you know what? Click this link. check out Forex Trendy. I think it's a great product. This is one of the products I'm a big fan of, only because indicator-based trading as at the core of how you trade, I'm not a fan of. And even though some of my other videos do have indicator-based strategies, you do notice that I add a little bit of flavor to them in terms of looking at price and what price is doing. Anyways, thanks for watching.